Welcome, guys, back to the Global Prime podcast. You can see we've got a couple of regular faces, myself and Greg, and we've got a new feature guest for today, Jim Rogers. Jim started the Quantum Fund early in his career, based in Singapore now, and is curiously the founder of the creator of the RICI, Rogers International Commodities Index. Pretty cool to have an index named after yourself, Jim.
Well, when I did that index long ago, nobody could spell commodities, much less invest in them. Now, of course, more and more people know about commodities and invest in them, but really it was pretty obscure.
Definitely. I think it's still an interesting thing, like a little bit of a badge of honor, I'd say. So the first question that I've got up, let me just bring this. We're looking at the escalating conflict in Europe. So I wanted to pick your brain a little bit about inflation topics. We know there's a couple of heavy sanctions based around Russia from the US and the European Union. Jim, I just wanted 5 minutes of what your expectations were for the future of the European economy and how that might affect inflation and the perspective on that.
The European economy or the war? Which are you asking about?
Generally, I'd be curious about the how this will affect the European economy, but the world economy in general.
War has always been bad for everybody, except a few people. And this war, of course, is bad for European and world economies. It's good for farmers, it's good for people who produce commodities, but it's not good for many people at all. And never has been. My view is that this will probably not last too much longer. Something is going to happen to calm things down, and we'll have a big rally in stock markets anyway. That may well be the last rally, but I don't think Mr. Putin wants this war to last much longer. I know the rest of the world doesn't.
Absolutely. 8 major countries have sanctions against Russia at this time, maybe a few other smaller countries as well. Is this something that you're expecting to last right up until the war, or could this be a lasting impact against people involved with the Russian economy?
If they can sit down and figure out something where everybody can save face, especially Mr. Putin, then things will calm down. I doubt if Mr. Putin will stop unless he can save face. I don't know what that means for him, but my view is, and maybe I'm totally wrong, but the market is indicating to me that this is not going to last much longer.
Nice. So curious, I'm wondering, with people who are invested in Europe and particularly invested in the Russian economy at the moment, are their worlds on fire? Or is this something that they, like a dip in the market, they might be able to push through, or a lot of people freaking out about their investments in Europe?
Well, the Russian stock market is closed. Most investments in Russia are now frozen, if not confiscated. So if you are an investor in Russia, you haven't lost everything, but you cannot do anything. In fact, Russian companies cannot even pay dividends to foreigners now. So if you own Russian shares, you can't even get your dividend if you're a foreigner. This is certainly not good for the Russian financial system and not good for the Russian economy. But war is not good for anybody either.
Nice. Market sentiment, Greg, with war looming, like we've been trading, at least haven't really seen impacts as great as this. What are your expectations for the market? This is new territory for you? This is quite a large shift in the market, or maybe not?
Not at all. I think Jim referenced it earlier when he said that he expects one more big push up in the stock market, and that is very much in line with what I'm expecting. I've shared my chart from a technical perspective. I believe this correction has ended, or it's very close to ending. Referring to the S&P at that 4,050 to 4,300 region, and it looks like we are seeing a bid from that region. So, as Jim said, it does look, my expectation is similar, that the war where we're at is likely to come to an end in the nearer term, and we are starting to see buyers step into the stock market at this point.
Very interesting. Our next topic, Jim, we're talking about agriculture, and I've been doing my research, a little bit of digging around YouTube, and I've heard you talking about agriculture and its effects on the market. With big movements recently, a lot of governments, a lot of countries are going for net zero by 2050. So I was curious to hear what your thoughts would be on the impact of the globe trying to reach net zero by 2050. And I might just reference a quote from Larry Fink, said in his interview to the CEOs, and I'll quote, "Every company will be profoundly affected by the transition to net zero economy." It seems like it's really is driving things, and no better person to ask about the effects than Jim Rogers. Curious about what you think.
Well, I'm trying to make it through 2022. So all these guys worrying about 2050, hooray, good luck. I'll settle for 2023 at this point. I have listened to this kind of thing and read about this kind of for decades. Most of these things come to nothing in the end. It's easier to say now, oh yes, by 2050, the sky is going to be blue and we're all going to be rich. Well, most of those kinds of projections wind up in the garbage can when other things take precedent. So I don't pay that much attention. Yes, I know we all want clean air. We all want clean water. There's no question about that. And we're all working towards it. But I don't pay that much attention, other than the fact that it is something we have to be aware of if we're investors. Things like ESG, whether we like it or not, you have to be aware of them. But I think we all have more problems between now and 2050.
Interesting. So where I was going with that is the future of agriculture intertwined with climate change policies?
Future of agriculture, what?
Is the future of the agriculture industry, as far as investments are standard, intertwined with climate change policies?
Well, agriculture has been a disaster for a long time, economic disaster. The average age of farmers in America is 58. The average age in Japan is 66. In Australia, it's the oldest in recorded history. You know, the highest rate of suicide in the UK is in agriculture. Indian farmers commit suicide. More people in America study public relations than study agriculture. So agriculture has not been a great field for a long, but therein lies the opportunity, obviously. Somebody's got to raise cotton and corn, or we're not going to eat, or we're not going to have clothes. So I am optimistic about changes that are taking place in agriculture. And throughout history, there have been many periods when the farmers have been on top of the world and owned the world. There have been many periods when farmers have been the poorest people in the country. So in my view, that is now shifting again. And if you know how to drive a tractor, you're going to be ahead of the guys in the financial community.
Interesting. I'll look up my John Deere dealership.
I would go and learn to drive a tractor if you don't know how.
That could be interesting. Greg, I'm going to throw to you now. So we're looking at the gold markets. After 10 years of growth since 2002, and then another 10 years of what I would think, from my perspective, is moderate growth, what could we be seeing in the foreseeable future with gold markets? Now, Greg, we organized a bit of a chart analysis if you wanted to.
Do you want the foreseeable future, or are you looking for the long-term prospects for gold?
So we're looking for, let's say, the long-term prospects for gold, if that's what you've got.
Get it all. I've got it all on my chart. I'm just trying to understand what you're after.
Yeah, cool. Let's go for long-term.
All right.
Greg,
so
I want to be rich. I want to be rich now.
Well, you're gonna have to have patience, Jim, because I don't think, despite the euphoria surrounding gold right now, I'm not convinced of super cycles and crazy levels getting hit just yet. But I am incredibly bullish gold. I have been throughout the cycle, and we are still, in my opinion, have ample legs to go. So I'm going to go through it then on a long-term basis, and I'll show you what I'm looking at on the shorter-term basis. Can you see my charts?
Absolutely, it looks good, Greg.
Great. So I've got the monthly chart up, and I must be honest, I dug it out today. I hadn't looked at this chart for a long time, as we've been in a very tight consolidation range since we topped out in August last year. But as you can see, I'm still looking for one more leg higher within this current cycle towards the 2,500, 3,200 region. And after which I am still expecting another leg towards the $1,000 level region before we start to see potential for crazy prices in gold up to 8,000, 10,000, whatever level you want to pick. And, you know, Jim, you speak about this quite often. I've been speaking about it quite often. I'm very much in the camp of expecting or looking for a major cycle correction to happen in the coming years. Could be as early as next year, potentially 2024. I don't think much after that, but we shall see. I never go with timing, so you can ignore the timings on the x-axis here. And I wouldn't be surprised if we do see this weakness in gold, this bigger fourth wave coming into a 2008 style crash, which is something that is on my agenda. Usually when we see these big liquidity events, gold does tend to succumb as it's a liquidity event, and we do tend to see gold be one of the one of the assets to recover the quickest. So I don't think it's all go time in gold, but I still think we have another leg higher within this current move. Looking at where we're at on the weekly picture, which is sort of a more zoomed in approach, I'm still not yet convinced that this is the low in this wave 4, which we struck in the 1670 region. But if we do continue higher here, I'm not going to get into the micro counts, which still give potential towards 1600 before higher. But the gist of it is I'm looking for at least one more move higher towards the 2500 region, which may be the top. But if we do get, ideally we'll get a corrective retrace and get one more push into this 3,000, 3,500 level before a correction sets in. So I'm incredibly bullish gold. I can go through the fundamental drivers all day, but from a technical basis as well, I am looking for higher in this move. But the real move, in my opinion, or the big gains, or I suppose still pretty big gains from here to the 5 of 3, but I still believe that gold could hit $5,000, $8,000 after the next correction.
Very interesting. Okay, Greg, we might stop that.
Can I just interrupt for 1 second? I own
Absolutely.
gold and I own silver. I'm not buying either at the moment.
Yeah.
But if I were going to buy either, I would buy silver now.
Yeah.
Because silver on a historic basis is much cheaper than gold. Doesn't mean it's going to go up. But and I'm not buying either at the moment. But if I were buying one, I would buy more silver.
So, Jim, I'm in total agreement. I believe silver is set up for much higher prices. We're looking for at least $50 on the next leg higher, potentially even up towards the $70, $75 level. Silver, to me, is very undervalued. I can go through the silver charts, but I still, on a more immediate basis, I still think we might see a little bit lower before the real rally phase takes hold. But I'm in total agreement with you. My belief is for silver to be the outperformer. But I'm also buying neither right now.
Buying what?
But I'm also not buying either right now.
Oh, well, me neither.
So Jim, that actually, what you said then kind of leads into the next question I had about finding something cheap. You were quoted saying, find something cheap where positive change is taking place. And that's a good indication for an investment. We were actually, Greg and I both curious on your thoughts of cryptocurrencies and whether or not the crypto market fits that profile of something cheap where positive changes are happening. Curious of your take on the crypto market right now and what you think about that as an investment.
Hey, question first. Why do you say it's cheap?
It's a valid point. What makes crypto cheap?
Well, I guess it depends on the quantity, I suppose, for sure.
Well, I don't understand. What is cheap about cryptocurrencies? You can't use them for anything.
So I think just entries to the market. I suppose if you wanted to invest in cryptocurrencies, there's definitely a lot of cheap ways to do it. But you're right, scale is the thing. But generally curious about what your thoughts are of the crypto market in general.
Well, I'd be very, very happy if I bought a lot of Bitcoin at $2. Oh boy, would I be happy. Well, but the facts are I have never bought nor sold any cryptocurrency. As I said, I wish I'd bought them all at $2. My view is, and the optimists, the bulls say that cryptocurrency is going to replace money and we're all going to be happy and everything will be great. My view is that if every country is working on putting the money on the computer now. In fact, in China, you cannot take a taxi with money. You have to have computer money. You cannot buy an ice cream. You have to have your computer money. So they're way ahead of the rest of us, but everybody's working on it. And my view is that when the US says, okay, this is money now, but if you want to use that money over there, you can use that money too. That's not the way the US government works, and not the way most governments work. They want monopoly and they want control, and they will either tax it or make it illegal or something. And so the future scope of cryptos as trading vehicles, fine, who cares? But as you said, they're cheap. I don't know why they're cheap. I can't pay my taxes with crypto. I can't do anything with crypto except trade. And if I'm a good trader, make a fortune. I'm not a good trader, so I don't even try.
I guess,
still
Jim,
don't understand why you say they're cheap.
Yeah, I also don't think that they're cheap. I think the question was more in line with, what Lockie's trying to say is with Bitcoin potentially doesn't have the potential to, and this is what the Bitcoin bulls shout about, to overtake the banking system and essentially become the fiat currency equivalent, the digital currency of the world. And that's what a lot of the Bitcoin bulls are hopeful of.
Well, Greg, both of you, I would love it if we could use other things for money, money of our choice. That would be an ideal system. If I wanted to use seashells, I could use seashells. But unfortunately, I can't take seashells down to the tax people and say, here's my taxes. I can't take crypto down and pay my taxes. I can't even go to the grocery store and buy bread with crypto.
Again, I agree with you, but the consensus, or not consensus, the feeling amongst the bulls is that in the future, that may all change.
Sure, in the future, the sky may be blue. This future, I may be rich. Who knows what's going to happen in the future? I'm just saying to you, in my view, for what it's worth, that if the bulls are accurate, somebody's going to stand up and say, no, you cannot do that. We will not take that for taxes. We will not let you use it, or we will tax you to the ends of the earth. I hope I'm wrong, but my reading of history and governments are that they don't think that way.
Could be a few intersecting paths with governments and how they kind of play their finger on new economies. The last topic I had was about the trading mindset. Jim, I saw an interview with the Forbes magazine, and you turned away from the high profile investment limelight to take a little bit of a different path, and I thought that was almost considered resetting your mind in a way. I'd like to have a bit of a discussion about how a trader or how an investor can not be burnt out in this kind of work, in this field.
Well, if I understood you correctly, everybody has to figure out their own way. When I first went to Wall Street, I assumed everybody knew what they were talking about. They were older, they were more experienced, educated. Didn't take me long to figure out they didn't know what they were doing either. I used to try to copy them and figured out. Then I realized I had to do it my own way. I know guys who are fantastic short-term traders. I mean, if they owned a stock for a day or a week, it was a long time. I learned I was not very good at that. In fact, I was very bad at it. So I had to figure out my own way. I figured out my own way and I had a bit of success. But I would say to everybody, don't listen to me. Don't try to copy anybody. You have to figure out your own way to make money. This is not an easy way to make money. I mean, everybody sees the TV and says, I could have bought Apple. This is easy. Well, I wish it were easy. We'd all be very, very rich if it were that easy. So I urge people to realize this is not an easy way to make money. And you have to figure out your own way, whatever that is. If it's throwing darts to make your investments, throw darts if it works.
Hindsight traders are the best traders, Jim.
What?
Hindsight traders are the best traders.
Hindsight traders.
Well, the ones who make money are the best traders.
No, but I'm saying it's very easy in hindsight. But people say we should have bought Bitcoin.
Oh, hindsight. Yeah, no, exactly.
You should have bought Apple at a few dollars.
Everybody says I could have bought Apple.
Yeah.
Everybody says I could have bought whatever, Microsoft. It doesn't matter. They all say this is easy. And at this stage of the markets, as you know, what happens often after long bull markets, a lot of new people are coming in. They're calling up their friends and say, I've discovered this new thing called the stock market. It is so much fun and you can make money and it's easy. We should all do it. And they all come pouring into the market because it's fun and easy. It's usually the sign that we're getting closer to a top. They don't come in at the bottom. They don't call up their friends and say, oh my God, there's this wonderful thing called the stock market. At the bottom, they're all saying, I am never going to invest in stocks again as long as I live. It's crooked, they cheat, they're liars, they're thieves. Stay away from stocks.
That's exactly how all market cycles end. You know, market cycles end on good news. Eventually, you run out of buyers, and that's what I believe we're at this cycle. You know, I'm still looking for another leg higher, 5.5, even as high as 6,000 possible. But I do believe the end is close in this cycle, and yeah, it's amazing from a sentiment perspective where you have people who decide, you know, I'm going to buy Apple when it hits $100. And then when it starts dropping quickly towards that level, they're too scared to buy it.
Just sell it.
Well, exactly. They sell the small amount that they bought. And that's the psychology of markets.
They really bought it at 400 and now they're dumping it at 150.
Correct. And that's...
by the way, another thing that comes around too after long bull markets or SPACs. We've had SPACs for 300 years. Not every time, but often after a long bull market. Here comes SPACs again. You know, SPACs were invented 300 years ago. They didn't come up last year or 2 years ago. Some of these things have happened. I've seen this rodeo before.
And this time is never different.
No, they always say it's different this time, Greg. Don't worry.
This time will be okay. The market's going to keep going higher.
Apple's going to 10,000. Do not worry.
When I start hearing things like that, I know it's time to worry.
And I hope you're right about gold and silver. I hope that when it goes down and you and I buy more, I hope that it brings in lots of people and it goes to 8,000. I'll settle for 8,000.
I'll happily settle and I'll happily sell my holdings there.
I'll sell for silver at 70, 75. If it goes to 75, I will have sold mine at 70.
One step at a time. Let's first hit this 2,500 level and get the correction, and then we can start worrying about those higher targets.
Oh, I said I'm not buying now, but I plan to buy more.
Yeah, same page.
And so, very nice. Well, look, I think that might wrap it up for this one. We've covered off my questions. That's an interesting conversation. Greg, would you like to say any last words, maybe any remarks to Jim, just how he's impacted your trading career and the kind of motivations he's given us?
Sure. Well, I mean, I started out in the financial industry in 2007, started out on interest rate futures desk and moved briefly to equities. But in 2009, late 2009, I started out at a commodities firm. And the first thing that I was given was a book. It was Hot Commodities by Jim Rogers. So it was my first learning tool many years ago. And yeah, I was dealing in a precious metals market for 10 years. So that was my first go-to book. So yeah, very interesting and always a pleasure to speak to him in person.
Yeah, nice. Actually, just from that, I might have one more question that I just thought of for Jim. Doing all of these media interviews, it seems like you're taking quite a lot of these Zoom interviews for YouTube and for the finance community. What's your outlook on these kind of media obligations to finance? And do you think of it as as a way to give back to the investment community in a way, or to?
Well, I would tell you, when I was young, a lot of people took time and helped me in various ways. And I feel like, why not? I should do the same thing. I don't have a job, so I have a little extra time.
Nice.
They don't call people who have jobs, because the people who have jobs are too busy to talk to the media. But I don't have a job. But mainly I remember how many people, some of them I don't even remember their names, but I remember that people took time to talk to me, to help me, etc. So I don't feel an obligation, but I feel that the least I can do is talk to people if they want to talk to me.
Absolutely. I can see.
But I also urge them not to do what I do. They have to find their own way if they're going to be successful. Do not get hot tips.
Yes.
Do not take maybe you take hot tips from Greg, but do not take hot tips from anybody, or you're going to go bankrupt. If you rely on hot tips, that's going to be the end.
I do, and I have taken hot tips from Greg.
But you get to follow up afterwards and
I
get
do.
told when I'm changing ideas.
Yes, yeah.
But that's a very good point. I just want to quickly touch on what Jim said there. Is you do see a lot of how people get into the market. If somebody tells them they should buy this, and then they go and they buy it, or they follow someone on Twitter, and the market starts to drop, and the person on Twitter declares they sold it 5 days ago or 5 weeks ago. So yeah, you can't take tips from anybody, in the sense that you have no idea what they're doing with it or how they're managing it. Doesn't matter the time frame. It's very important. You're not going to make it like that.
If you buy something because somebody said it, then when something goes wrong, you don't know what to do.
Correct.
You can't call him. He's long gone, or he sold it, or who knows what.
Yeah.
So that's a main problem of listening to buying things you don't understand, because then you don't know what to do when things go wrong. You don't even know what to do if things go right. Maybe you should buy more if it goes right. Maybe you should sell it. You don't know what to do because you don't know why you bought it in the first place.
You're better off doing the research yourself and knowing what your plan is, what your strategy is before entering any trade investment.
I repeat, everybody has to figure out their own way, and then you might be successful. Even then, you might not be successful. This is not easy.
Gives you a
But
chance.
if you don't do your own way, you're not going to be successful.
Nice note to leave on. Well, look, that is the Global Prime podcast. We're at about the 40-minute mark, so interesting listen across a couple of different topics. Jim, did you have any place people can find you to catch up on what you're doing, or is it just really whatever interviews you pop up on?
Wait, say that again. Do I have?
Did you have any place where you're posting your work, or where you're like jimrogers.com was where we found your details? Is that the best place for our listeners to?
I don't have anything to sell. I don't have any funds. I have some books, but you can buy my books if you want to. Greg bought my book once. Hooray for Greg, and now he's rich. See, all you have to do is buy my books and you get rich.
It was bought for me. It bought for me by my previous company. That was a good read.
No, I don't have anything to sell. I don't have have a website, but it basically just gives my schedule. And I went around the world once. It talks about that, but I don't have anything to sell.
Okay, nice. Well, looking forward to seeing this popping up on our YouTube channel, and all of our listeners will have this sent out to them, so they can all kind of catch up on you at that point, and go down the Jim Rogers rabbit hole on YouTube, of which there are hundreds of videos by this time. Greg Rubin, you can catch him in his mentor room still. We're still running the mentor room. Checking out the mentor room. We'll leave links to those ones in the comment section below on this YouTube video. Thanks for spending the time with us, gentlemen. Thanks for figuring this out internationally. Hope the weather's fantastic in Singapore, where you are, Jim. We're facing a sunny day today, but the rain recently.
Right. Well, Greg, if you have any hot tips, please send them to me.
Thank you, Jim. Pleasure to speak to you. Thanks, Lucky.
Very nice. Enjoy the rest of the afternoon, gentlemen.
Cheers.
Thank you.
Likewise, guys. Let's do it again sometime. Thank you.
Thanks,
Bye-bye.
Jim. Bye.